So this is topic C.1 revision for the Unit 2 Finance for Business exam. As with all the other the videos that we've been done, I'll talk reasonably quickly, so make sure you pause the video. If you're unsure about something, replay it, listen to bits over and over again. Once you've started making some notes on the things that we're talking about in the video, if anything is a bit of a struggle, then look at some of the other really good YouTube videos which are out there. Also use the textbook chapter that you've got at home and really think about, can I try and solve this problem? Because if you can try and solve the problems, that's where you'll learn the most, when you are really thinking about it. This topic is about making a profit. So some of the things that you're trying to get out of the video are, what is gross profit, what is net profit. Really need to draw your attention to the fact that you will not be given this formula in the examination, so you need to learn these two formulas. Also looking at measuring financial success and looking at the income statement. It sounds more complicated than it is, and this should hopefully be a reasonably short video. So what I want you to think about is the cost of sales. The cost of sales is effectively the amount of money that it costs to make a product. So try and just think of variable costs and you won't go far wrong. There is a subtle difference, but for the purposes of what you need to know for the exam, just think variable costs. So what are the cost of sales for a bakery, a builders, a hot dog vendor and a jewellery maker? Press pause, have a go. So hopefully you've had a little go at them, and we'll have a quick look at some of the answers. So for a bakery it might be flour, egg, sugar, icing sugar, wages. For the builders, cement bricks. For hot dog vendor and jewellery maker, have a look. Remember, it's a vocational subject that you're doing, and what that means is that in the exam they won't just ask you what are the cost of sales, they'll relate it to a business example. So think about the different business examples that you could potentially be asked about. These are, the first two definitely would be quite common. The other things that a business needs to consider, so after the cost of sales, so all those things which are involved in making the product, everything else is considered expenses or overheads. They're all the other costs of the business, so whether that's rent, insurance, all that sort of stuff. So then that leads us to this income statement, or the profit and loss account. It's not a particularly difficult document. But all you really need to do is know how that these figures are worked out. So the top half is called the trading account, or it's sometimes known as the trading account, and it allows us to work out gross profit. So what was the revenue or income from sales? In this case, in this example, it was 50,000. What was the cost of sales? So those variable costs, or how much it cost to produce the products. In this case, 15,000. So what are you left with? So this money coming in, this money going out, that leaves you with £35,000 here. Okay, so this is known as your gross profit. So you need to be able to work out gross profit, income from sales, cost of sales. That will give you your gross profit. The second half of the profit and loss account, or the income statement, is looking at our expenses, our overheads, our expenditure. So there's a few different names that we could have for that. And then it's adding up all the other expenses that a business may have. So in this case, wages, utilities, rent, and then taking that away from the gross profit, and that gives us the net profit. It isn't a particularly, as I say, difficult, not a particularly difficult document to have a look at the profit and loss account, but you do need to give yourself a minute and think about how these figures are worked out. In the exam, it might ask you to fill out a few gaps, so fill out a gap there, fill out a gap there. But one of the things that it might ask you to do in the exam is to comment on it. So why do we work out gross profit and also work out net profit? What's the difference? Why do we bother doing that? So if we have a think about here, so we've got, this is our revenue, our money coming in from the business, and then we want to know, well, actually, how much did it cost the business to get that revenue? So how much did it cost to make those products that we were able to sell? So in this case, we end up with a gross profit of £35,000, which is pretty good. The difference between this figure and this figure leaves quite a healthy profit. What we see then is this £35,000 of gross profit then falls away quite quickly to leave us with our net profit, which is £5,000. So what you might then start to say, well, hang on, the business to produce the products didn't cost that much. It was 15,000, and our profit that we were left with there was quite high. It was 35,000. But then the wages, the utilities and the rent actually took a huge proportion of that profit, and it meant we were only left with £5,000 worth of net profit. So what you might want to do in the exam, what it might ask you to do in the exam, is say, well, how much was that cost of sales? Did it leave us with a lot of profit? So let's say, for example, this became 40,000 and our gross profit was only 10,000. Then actually our cost of sales, how much it cost us to produce that product, we could say is probably way too high. In this example though, that's quite low as a proportion of the revenue or the sales that we got, whereas actually this bit is quite high. So most of our profit went actually paying wages and bills of other descriptions. So what could you do? So in this example, just looking at this business, could we move somewhere cheaper? Could we get our electricity or our water or our gas from someone else? Wages, do we really need to spend £20,000 on wages, or could we do something about that? Maybe either reducing wages or reducing hours, or possibly even making some staff redundant. And they're the things that it'll ask you to do with a profit and loss account. Again, there'll be another video which will be about the 8 markers. So the key is to be able to fill it in, but then also thinking about, well, what is it actually showing us? Why is there a difference between gross and net profit? So pause this, really think about how they've calculated the figures. It shouldn't be a particularly difficult concept, but hopefully you can work that out. And then if we just have a quick look at this. So again, they're not going to give you the formula. What is the difference between, what is the formula for gross profit? What is the formula for net profit? And remember that this formula just ends up on the end of this. So once you've calculated gross profit, you take away expenditure, and that will give you the net profit. Obviously, positive profit means that the business has got money to reinvest. It can get new premises, it can start to make more products, do research to generate new products, do marketing to get more customers. But a negative net profit means that actually, if that continues over a period of time, then the business will not be able to keep going. Most businesses don't make a profit straight away, and they will use bank loans and money invested in the business to keep themselves going. But businesses have to, at some point, stop making a loss. We can look at how successful a business is by looking at that profit and loss statement, and we can also start to think about, can we identify the purpose? So what's it for? So it's to show how well we've performed over that year. Can we add some of those figures in? And then can we think about, well, what are those figures actually showing us? Okay. So have a quick look at this video again. Make some notes and make sure you've really thought about how to calculate these in the examination.